Welcome to Libertex. In this video, we'll be presenting you with everything you need to know about scalp trading and scalping strategies as they relate to day trading and give you the information you need in simple terms. Scalping is a type of trading that involves taking positions and selling them very shortly after, often for very small gains. The accumulation of many scalps in a trading session can add up, which is why this type of trading has become so popular lately with the highly volatile market conditions we've been experiencing. But before we get started, for the latest news, developments, and breakout trades from inside the crypto markets, as well as stocks, metals, forex, and more, make sure to subscribe to our channel and help fuel our growth and efforts to provide better content as it relates to your trading. So without further ado, let's get started and explore the world of scalp trading. Scalping, in its simplest terms, involves buying something for cheap and selling it for slightly higher, resulting in a nice amount of successful trades over time. This last point is essential for scalp trading as it relates to the markets. Because scalping is a type of day trading, it comes with a high amount of risk, but is often less risky than day trading by itself. Time is usually more sensitive with scalping, as traders are not looking to hold the position for the entire day, often selling in a period of minutes after taking the position. Due to this, big movements are not common. Instead, it is the accumulation of numerous scalp trades over the course of the entire trading session that can result in potential profits if carried out effectively. Successful scalp traders therefore look at the big picture, the amount that they will accumulate from multiple day trades that are quickly bought and sold throughout the day. Scalp traders attempt to locate small price fluctuations and buy small dips throughout the period of the trading cycle. Shortly after, when the asset goes in the desired direction depending on if the position is long or short, scalpers sell and start looking for the next position to open or close. With scalp trading, it's common to use leverage to see bigger potential returns from small price fluctuations. Traders should always exercise caution when using leverage, because while it can multiply your gains, it can also multiply your losses if the trade goes against you. One of the most common strategies for scalp traders is to buy a number of shares at a certain price, and then on the 1-minute chart, as soon as the price of the asset moves up, to unload all or a large percentage of the shares at a slightly higher price. This method is then repeated throughout the course of the entire trading session. To have a better advantage when scalp trading, create a watch list of hot stocks, cryptocurrencies, or other assets that are highly liquid and provide a decent amount of volatility. Monitor these assets for a period of time before opening up any trades to get a feel for the range that they typically move between, and therefore to get a better idea of what to expect on an average trading day. Pay attention to technical formations and look for breakout opportunities to quickly get in and ideally ride a short move to the upside and then sell to realize successful results. Before entering a trade, however, always have a plan of action in case the trade does not go up or trade sideways. It's not recommended to buy in after or while an asset has already been rising up for a period of time, as there is always risk that you will be buying at the top and that your position won't have as much room to run. Therefore, set stop losses and have a course of action to make up for losses should you find yourself in this situation. Never trade with money you can't afford to lose. Scalp trading differs from more traditional trading methods in that it goes against the philosophy of letting your high-performing assets continue to run. With scalping, no matter if an asset is high-performing or not, it is sold shortly after opening the position. The goal is incremental adjustments, not long-term investing or holding. Scalping is certainly not for everyone and can be very tedious and time-consuming, as it requires traders to be closely monitoring the market and the trades on a minute-to-minute basis. This requires a lot of discipline and can be very stressful. Furthermore, scalpers have to be at peace with their emotions. For example, if a scalper buys an asset at $1 and then sells at $1.03, that would be considered a nice trade by many scalpers. However, what if the asset rises to $1.50 an hour later? Would you feel frustration? In conclusion, scalping is not a revolutionary strategy, but simply one of the many employed by traders on a daily basis depending on the goals and trading preferences of the individual. Scalping is all about small wins, not overnight success, and can be good for traders to squeeze momentum out of a small moving market. What are your thoughts on scalp trading, and have you had any success with it? Let us know your thoughts and share your stories in the comments below to join the conversation with our community of traders. And if you're looking for the best brokerage to get started with trading stocks, cryptocurrency, forex, metals, and more, we'd love it if you'd check out our award-winning platform at Libertex.com. We offer the most competitive rates and secure processing. It only takes seconds to register, and you can start trading without depositing any money by getting started on our demo account today. To support all things related to trading, we'd appreciate it if you could like this video and join our family of traders by subscribing to keep ahead of the trends. We'd like to wish you a great month in the markets and success in your trades. Thanks for watching, and see you next time.